My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your weekly technical analysis of London and New York cocoa plus New York cotton. I'll start with ICE Europe cocoa. 8 weeks ago I asked the following questions. They were partially rhetorical, but also partially, well, I wasn't sure. I quote, "Question now is, will the market make up its mind, set aside its indecision and maybe try again at the neckline to get down to the middle time? If not, then what will it try to do, as the topside is still fairly limited?" End of quote. The neckline, currently at 1631, refers to the August to October 2020 head and shoulders move, and the middle time, that refers to the May-September 2020 bearish shift pitch, or currently at 1553. Well, for a while nothing happened. Then the market shot up through all the moving averages and other resistances. Drawing the market out of the doldrum prices had been lodged within since late December last year. There seemed to be no master pattern, just an explosive venting of pent-up energy. Prices finally petered out topside 5 weeks ago, and we've headed lower since then. Prices then hesitated 2 weeks ago. I put that down to the market meeting the medium moving average, currently at 1708, the short medium moving average, currently 1702, and the long moving average 1693, before pushing lower last Tuesday. Thus, prices have entered back into the old doldrums once again, starting from about 1680 and stretching down to the 1650 area, and then separately also from 1647 down to the same neckline mentioned earlier in the 1631 area. There's one final thought I'd like to share. It's to look at the whole July 2020 to date action as a possible giant sideways triangle, with the July 2020 to date uptrend currently at 1653 below, and the September 2020 to date downtrend currently 1834 on top, making up the pattern. It may be that this pattern may make sense of what is going on here. I'll just wait and see on that one. ICE US cocoa. I'm grateful here. This contract still does appear to be much clearer and easier daily chart here compared to the London contract. I wrote this 12 weeks ago. I quote, "A different sort of action here compared to the London contract, and thankfully a clearer one. Early July to early November 2020 bullish shift pitchfork has started to run this market, along with some help from the following, notably the long moving average, currently 2462, the 50% Fibonacci lines of the October 2019 to February 2020 move at 2472, and the whole of the 2020 move at 2514, which, along with the medium moving average, currently 2519, and the short medium moving average, currently 2469, are acting as attractors to this market." Most of these comments still have some validity, especially the bullish shift pitchfork. That was until last week. We've then had a drop from early March when prices approached the middle time, currently at 2720 overhead, then backed off. All has been consistent, and last week prices broke down through the lower time, currently, as I say, 2453 of this bullish shift pitchfork. Monday this week seemed to verify this move, as prices made a combined key reversal down and bearish engulfing pattern, hanging off the lower time, if you will. However, we've really not had any follow through lower so far. I will retire the bullish shift pitchfork next week, unless something dramatic happens in between. This will free up what now may be a larger and more serious action. I've drawn what I call a super diamond pattern, a huge one, stretching from roughly the end of April last year and into June this year. I suspect I may not need the extension out to June, as prices seem to have broken down through the lower uptrend, currently at 2458 last week, and once again seemingly verified it this week. If we stay below the super diamond pattern for another week, then I'll start putting potential target levels The reason why? Simple. I am very concerned that this might all be a false break on the downside. So caution. ICE US cotton number 2. Main features over the last 3 weeks or so have been the breakdown below the neckline, currently at 86.17, of the January to March obtuse head and shoulders top. The subsequent drop down to the combined April 2020 to date uptrend, currently at 79.20, and the November to 2020 to date uptrend, also currently at 79.20. And finally, possibility that the last 3 weeks or so may be a bear flag or bearish halfway hesitation. That sort of type action. An initial potential target X below for the head and shoulders top is in the 76 even area, whilst a full potential target X1 is lower in the 73 even area, obviously. It's a little early yet to draw a target for any possible bear flag or halfway hesitation. Just keep that in the back of your mind. Meanwhile, there is a possibility, still again just in my mind, the whole April 2020 to date action could be a bearish bump and run reversal pattern. I'm not convinced as yet. I would like to think it is a little bit more about it before I start labeling and placing targets anywhere, but it is out there now. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.